We'll be reviewing IRS Form 6251, Alternative Minimum Tax for Individuals. Not all taxpayers will be required to complete this form. However, all taxpayers are subject to testing to determine whether they owe alternative minimum tax. So the purpose of Form 6251 is to figure the amount, if any, of your alternative minimum tax, also known as AMT. The AMT is a separate tax that is imposed in addition to your regular tax, and it applies to taxpayers that have certain types of income which receive favorable treatment or who qualify for certain deductions. Because these tax benefits can significantly reduce the regular tax, the AMT sets a limit on the amount of these benefits that can be used to reduce total tax. In other words, certain items of adjustment or deductions are calculated to help you determine what the alternative minimum tax amount should be. People who must file IRS Form 6251 include people who determine that line 7 is greater than line 10, and we will get to that momentarily. People who claim any general business credit in either line 6 in Part 1 of Form 3800 or line 25 of Form 3800 is more than 0. You also must file if you claim the qualified electric vehicle credit on IRS Form 8834, the personal use of alternative fuel vehicle refueling property credit on Form 8911, or if you have a credit for prior year minimum tax on Form 8801, or if the total from Form 6251 lines 2C through 3 are negative, and line 7 would be greater than line 10 if you did not account for these lines 2C through 3. So we will go through each of these items of adjustment, starting with Part 1. It's important to note that this form actually has two parts to it. There's the alternative minimum tax calculation at the bottom, and there's a third part, which is where you actually calculate the tax using maximum capital gains rates. So at the top, your name and social security number will be auto-entered by your tax preparation software. Most likely line 1 will be as well. If line 15 of your Form 1040 is more than 0, then you're going to enter the amount in line 1. If it is exactly 0, then you'll subtract line 14 from line 11 of your 1040 or 1040 SR and enter the result here. And if it's less than 0, then you enter that as a negative amount. Starting with line 2A, we will go through each of these items of adjustment according to the IRS form instructions. In line 2A, if you complete Schedule A on your tax return, then you will enter the amount of all taxes from Schedule A, line 7, except for generation, skipping transfer taxes on income distributions. If you do not file Schedule A, then simply enter the standard deduction that you reported on 1040, line 12. But if there are Schedule A items and you filed Schedule A just to claim an increased standard deduction on your 1040 or 1040 SR due to a loss that you suffered in a federally declared disaster area, then enter 0 on line 2A and go to line 2B. you will include the standard deduction before it was increased by any net qualified disaster loss on line 3. For line 2B, enter any amount of refunds from Schedule 1 on your 1040, line 1, that is attributable to state or local income tax. Also, you should include any refunds received in the tax year and included on Schedule 1, line 8Z, that are attributable to state or local personal property taxes or sales taxes, foreign income taxes, or state, local, or foreign real property taxes. You will enter this amount as a negative number. If you do include an amount from line 8Z of your form of Schedule 1, you must enter a description and an amount next to the entry space for line 2B. If, for example, there is a refund of real property taxes, you would enter real property and the amount next to the entry space. For line 2C, you will enter any investment and interest expense. If you filled out Form 4952, which is the investment interest expense deduction form for your regular tax, you'll need to fill out a second form for the AMT as follows. Step 1, follow the form instructions for line 1, but when you complete line 1, also include any interest that would have been deductible if tax-exempt interest on private activity bonds were includable in gross income. In other words, you're going to complete this Form 4952 if you have any tax-exempt interest on private activity bonds. That will be the adjustment. Step 2, enter your AMT disallowed investment interest expense from the previous tax year on line 2. Then you'll complete line 3. Step 3, when completing part 2 of your 4952, you'll have to refigure gross income from property held for investment, net gain from the disposition of property held for investment, net capital gain from the disposition of property held for investment, and net expenses. And you'll include on line 4A any tax-exempt income from private activity bonds that must be included on Form 6251, line 2G, which we will get to momentarily. On line 4G, enter the smaller of the amount from line 4G on your regular 4952 or the total of lines 4B and 4E from the current AMT Form 4952. In step 4, you'll complete part 3. You'll enter this amount, the amount on line 2C, the difference between line 8 of your AMT Form 4952 and the line 8 of your regular 4952. If your AMT expense is greater, then enter this number as a negative amount. For line 2, depletion. If you claimed depletion as an expense, then you need to refigure your depletion deduction for AMT. And to do this, use only income and deductions allowed for the AMT when refiguring the limit based on taxable income from the property under Section 613A and the limit based on taxable income with certain adjustments under Section 613A D1. If you need further guidance, please refer to the instructions for Form 6251. For line 2E, you'll enter any net operating loss deduction from Schedule 1, line 8A. You'll enter this number as a positive amount. For line 2F, you'll enter alternative tax net operating loss deduction. This is the sum of the alternative tax net operating loss, carrybacks and carryforwards to the tax year subject to limitations. This amount for a loss year is the excess of the deductions allowed for figuring AMTI, excluding this deduction, over the income included in AMTI. There may be a limitation to this deduction. On line 2G, you're going to enter interest income from specified private activity bonds that were reduced, but not below zero, by any deduction that would have been allowable if the interest were includable in gross income for the regular tax. Each payer of this interest should send you a Form 1099 INT, and this interest should be reflected in box 9. Generally speaking, specified private activity bonds are any private activity bond where the interest is not includable in gross income for regular tax if the bond was issued after August 7th, 1986. But specified private activity bonds generally do not include bonds issued in 2009 or 2010. If you are filing Form 8814, Parents' Election to Report Child's Interest and Dividends, you'll include on this line any tax-exempt income from line 1B of that form, which is a preference item. Line 2H, Qualified Small Business Stock. If you claimed the exclusion under Section 1202 for gain on qualified small business stock acquired before September 28, 2010, and held for more than 5 years, you will multiply the excluded gain as shown on Form 8949 in column G by 7%. You'll enter this amount on line 2H as a positive number. Line 2I, exercise of incentive stock options. For regular tax purposes, no income is recognized when an ISO incentive stock option is exercised. However, this rule does not apply for AMT. You must generally include on line 2I the excess of the fair market value of the stock acquired through exercising the option when your rights in the acquired stock first become transferable, or when these rights are no longer subject to a substantial risk of forfeiture, over how much you paid for the stock, to include any amount you paid for the ISO used to acquire the stock. If you received a Form 3921, this may help you figure your AMT adjustment. Line 2K, disposition of property, the difference between AMT and regular tax gain or loss. You will use this line to report any AMT adjustment resulting from figuring 1. The gain or loss from the sale, exchange, or involuntary conversion of property reported on Form 4797, Sales of Business Property. 2. Casualty gain or loss to business or income-producing property reported on Form 4684, Casualties and Thefts. 3. Ordinary income from the disposition of property not already taken into account in either 1 or 2 above, or on any other line on 6251. 4. Capital gain or loss to include any carryover that is different for AMT purposes reported on Form 8949, Sales and Other Dispositions of Capital Assets, or Schedule D. You may need to refer to the form instructions for additional details. Line 2L, depreciation on assets placed into service after 1986. So to avoid duplication, any AMT adjustment or tax preference item taken into account on this line should not be taken into account on any other tax preference line of this form. Do not use line 2L for depreciation related to passive activities, an activity for which you are not at risk, income or loss from a partnership or S corporation if basis limitations apply, or a tax shelter farm activity. This adjustment will be taken into account on line 3. So generally you must refigure depreciation for AMT for property placed into service after 1998 that is depreciated for regular tax using the 200% declining balance method. Section 1250 property placed into service after 1998 that is not depreciated using straight line method, or tangible property placed in service after 1986 but before 1999. Do not use this form to calculate or refigure depreciation for the following items. 1. Residential rental real property placed into service after 1998. 2. Non-residential real property with a class life of 27.5 years or more placed into service after 1998 that is depreciated using the straight line method. 3. Other Section 1250 property placed into service after 1998 that is depreciated using straight line method. 4. Property placed into service after 1998 other than Section 1250 property that is depreciated for regular tax purposes using the 150% declining balance method or the straight line method. 5. Property for which you elected to use the alternative depreciation system of Section 168G for regular tax purposes. 6. Qualified property that is or was eligible for a special depreciation allowance if the depreciable asset basis of the property is the same for AMT and the regular tax. 7. Any part of the cost of any property for which you took a Section 179 expense deduction. 8. Motion picture films, videotapes, or sound recordings. 9. Property depreciated under the unit of production method or any method not expressed in a term of years. 10. Indian reservation property that meets the requirements of Section 168J. And 11. A natural gas gathering line placed into service after April 11, 2005. Line 2M, passive activities. You will need to refigure passive activities gains and losses for AMT purposes by accounting for all adjustments and preferences in any AMT prior year unallowed losses that apply to that activity. You may need to fill out an AMT Form 8582, Passive Activity Loss Limitations, and AMT versions of other forms and schedules on which your passive activities are reported in order to determine your passive activity loss allowed for AMT. Do not file the AMT versions of these forms and schedules with your tax return. Keep them for your records. Line 2N, loss limitations. To avoid duplication, any AMT adjustment or tax preference item taken into account on this line should not be accounted for on other lines. For passive activities, see line 2M instead. For tax shelter farm activities, see line 3 instructions. Line 2O, circulation costs. Do not make this adjustment for costs for which you elected the optional 3-year write-off for regular tax purposes. Circulation costs, which include expenditures to establish, maintain, or increase the circulation of a newspaper, magazine, or other periodical, deducted in full for regular tax purposes, must be capitalized and amortized over 3 years for AMT purposes. Enter the difference between the regular tax and the AMT deduction. If the AMT deduction is more than the regular tax deduction, enter this difference as a negative number. Line 2P, long-term contracts. For AMT purposes, you must generally use the percentage of completion method described in section 460B to determine your income from any long-term contract. However, this rule does not apply to home construction contracts as defined in section 460E5. Enter the difference between the AMT and regular tax income. If the AMT income is smaller, enter the difference as a negative amount. Line 2Q. Do not make this adjustment for costs in which you elected the optional 10-year runoff for regular tax purposes. Mining, exploration, and development costs deducted in full for regular tax purposes must be capitalized and amortized over 10 years for AMT purposes. Enter the difference between the regular tax and the AMT deduction. And if the AMT deduction is more than the regular tax deduction, enter this number as a negative amount. Line 2R, research and experimental costs. Research and experimental costs deducted in full for regular tax purposes must be amortized over 10 years for AMT purposes. Enter this difference in line 2R, and if the AMT deduction is more than the regular deduction, enter the difference as a negative amount. Line 2S, installment sales. The installment method does not apply for AMT to any non-dealer disposition of property after August 16, 1986, but before January 1st, 1987. Enter the amount of installment sale income reported for regular tax purposes as a negative number on line 2S. Line 2T, intangible drilling costs. Do not make this adjustment for costs where you elected the 60-month write-off for regular tax purposes. Additional details are in the IRS form instructions. Under line 3, you will enter other income-based related adjustments to include depreciation figured using pre-1987 rules, pollution control facilities, tax shelter farm activities, charitable contributions of certain property, business interest limitations, biofuel producer credit, and biodiesel and renewable diesel fuels credit, mortgage interest, net qualified disaster loss, and other related adjustments. If you have an entry on line 2C because you deducted investment interest allocable to an interest in a trade or business, or on line 2D, 2H, 2I, 2K through 2T, or if you have any amount included on line 3 from pre-1987 depreciation, pollution control facilities, tax shelter farm activities, you may have to refigure items of deduction or income based on a limit other than AGI or modified AGI. Affected items may include Section 179 expense deduction, expenses for business or rental use of your home, conservation expenses, taxable IRA distributions, self-employed health insurance deductions, self-employed SEP, simple and qualified plans deduction, or IRA deductions. For line 4, alternative minimum taxable income. If your filing status is married filing separately and line 4 is more than $776,100, you must include an additional amount on line 4. If line 4 is $1,012,300 or more, include an additional $59,050. Otherwise, include 25% of the excess of the amount on line 4 over $776,100. For example, if the amount on line 4 is $796,100, you would enter $801,100 instead. That reflects the additional $5,000, which is 25% of the difference of $20,000. $796,100 minus $776,100 gives you $20,000. Calculating 25% of that is $5,000, which you would then add. On to part 2, alternative minimum tax. Line 5 is the exemption amount, which you will enter based on your filing status. On line 6, you'll subtract line 5 from line 4. If it is 0 or less, enter 0 on line 6, on line 7, line 9, and 11, then go to line 10. If it is more than 0, you will go from line 6 to line 7. On line 7, if you claimed the foreign earned income exclusion, housing exclusion, or housing deduction on Form 2555, you must use the foreign earned income tax worksheet in the IRS Form 6251 instructions to determine the amount to enter on line 7. If you reported capital gains distributions directly on your Form 1040, if you reported qualified dividends on Form 1040, or if you had a gain on both lines 15 and 16 of Schedule D, then you will need to complete Part 3 on the back of this form. Enter the amount from line 40 into line 7. All other taxpayers can follow the instructions directly on the form. If line 6 is $206,100 or less, multiply this amount by 26%. Otherwise, multiply line 6 by 28% and subtract $4,122 from the result. If you're married filing separately, those numbers are exactly 1/2 of the previously stated amounts. For line 8, you will enter any applicable alternative minimum tax foreign tax credits, which is a tax credit that you can claim against AMT. You will figure this tax credit using the same limitation rules that apply to the foreign tax credit for regular tax purposes, but with AMT amounts. You may be able to use a simplified calculation. If this is a possibility for you, there are more details in the form instructions. Line 9, you'll subtract line 8 from line 7. In other words, you're subtracting any applicable tax credits from your tax liability, and this represents your tentative alternative minimum tax. For line 10, you'll add Form 1040 or 1040 SR line 16 minus any tax from Form 4972 and Schedule 2 line 2. Subtract from the result Schedule 3 line 1 and any negative amount reported on Form 8978 line 14 which is treated as a positive number. If you use Schedule J to figure your tax on Form 1040, refigure that tax without using Schedule J before completing this line. Line 11 is your alternative minimum tax. You can subtract line 10 from line 9. If this is 0 or less, enter 0 and enter this number here and on Schedule 2, line 1. Part 3 applies to taxpayers if line 7 directs you to do so, or if you've completed the foreign earned income tax worksheet in the form instructions. For line 12, you will enter the amount from line 6. If you're filing Form 2555, enter the amount from line 3 of the worksheet in the instructions for line 7. For line 13, you'll enter the amount from line 4 of the qualified dividends and capital gain tax worksheet in the instructions for 1040, or the amount that from line 13 of your Schedule D, whichever applies. You may need to refer to the instructions. If you are filing Form 2555, the instructions will direct you for the amount to enter. In line 14, you will enter the amount from Schedule D, line 19, as recalculated for AMT purposes. Additional details are in the form instructions. For line 15, if you did not complete a Schedule D tax worksheet for regular tax or AMT purposes, enter the amount from line 13. Otherwise, add lines 13 and 14 and enter the smaller of that result or the amount from line 10 of your Schedule D tax worksheet. In line 16, you will enter the smaller of line 12 or line 15. In line 17, you will subtract line 16 from line 12. In line 18, if line 17 is $206,100 or less, you will multiply line 17 by 26%. Otherwise, multiply by 28% and subtract $4,122. If you are married filing separately, use the numbers indicated in the parentheses, $103,050 and $2,061. For line 19, enter the amount as stated on the form that applies to your tax filing situation. For line 20, enter the amount from line 5 of your qualified dividends and capital gains tax worksheet, or the amount from line 14 of the Schedule D worksheet, whichever applies. If you did not complete either worksheet for regular tax purposes, enter the amount from Form 1040, line 15. If this number is 0 or less, enter 0. Line 21, you will subtract line 20 from line 19. If this is 0 or less, enter 0. For line 22, you will enter the smaller of line 12 or line 13. For line 23, you will enter the smaller of line 21 or 22. This amount is taxed at 0%. For line 24, you will subtract line 23 from line 22. In line 25, enter the number as indicated on the form that applies to your tax situation. In line 26, enter the amount from line 21. For line 27, enter the amount from line 5 of your qualified dividends and capital gains tax worksheet, or the amount from line 21 of the Schedule D tax worksheet, whichever applies. If you did not complete either worksheet for regular tax purposes, enter the amount from your Form 1040, line 15. If this is 0 or less, enter 0. For line 28, add lines 26 and 27. For line 29, subtract line 28 from line 25. If this is 0 or less, enter 0. For line 30, enter the smaller of line 24 or 29. For line 31, multiply line 30 by 15%. Line 32, add lines 23 and 30. If lines 32 and 12 are the same, skip lines 33 through 37 and go directly to line 38. Otherwise, go to line 33. In line 33, you will subtract line 32 from line 22 and multiply that result by 20% in line 34. If line 34 is 0 or blank, you will skip lines 35 through 37 and go directly to 38. If not, go to line 35 and add lines 17, 32, and 33. In line 36, you will subtract line 35 from line 12. In line 37, you will multiply line 36 by 25%. In line 38, you will add lines 18, 31, 34, and 37. For line 39, if line 12 is $206,100 or less, multiply line 12 by 26%. Otherwise, multiply line 12 by 28% and subtract $4,122. If you are married filing separately, use the number indicated in parentheses. Line 40, you will enter the smaller of line 38 or 39 both here and on line 7. If you are filing Form 2555, do not enter this amount on line 7. Instead, enter it on line 4 of the worksheet contained in the instructions for line 7. That is a complete overview of IRS Form 6251. Additional details may be found in the IRS Form instructions. If you have any questions, please post them in the comment section. Otherwise, we've written a step-by-step in-depth article which you can read on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 6251 in the search bar, and you should see the article come up. If you like our articles and our videos, please feel free to subscribe on our website or subscribe to our YouTube channel. As always, if you have any questions, please post them in the comments section. Thank you.